if we can break above that, it gives you a little bit of a short-term short squeeze on Bitcoin. Overall, I don't see it lasting for very long, and I ultimately see more downside. Right now, my high-end target on Bitcoin is around the 12 to 13,000 level.
Hello everyone and welcome to the Daily Crypto. We are joined by Gareth Soloway, who will share his thoughts on where he thinks the economy and Bitcoin are headed. But before we get started, let's see where the Fear and Greed Index is at for today. As of recording this video, the F&G index is at 21, down slightly from yesterday's 22. Currently Bitcoin and Ethereum are trading for $19,297 and $1,328 respectively. Without any further ado, let's get right into the video.
Just like everyone out there in the crypto world or the stock world, I started out trying to hit home runs, make tons of money on one trade. And I found that it would work for a few times, and I'd be thinking I was the best, and I was like, oh, I finally got this down. And then one bad trade would wipe me out, right? It would take 50% of my account away. And so really, as I grew, I started to recognize that singles and doubles, like small little wins, are the way to go. And that's how you build real wealth, because then eventually you're going to have that bad trade. And so you can't let that bad trade wreck your account. And if it takes away two winners, so be it. At least then you just need two winners to get back in the green or back to flat, and you can.
This is what every beginner trader needs to fully understand, as the lack of risk management is one of the biggest causes of liquidated accounts. One bad trade is all it takes to put you back to where you started, or even lower. Gareth says that small wins over a longer period of time are the way to go if someone wants to build wealth.
Creates this fear and panic in the investing public, which then reacts, right? So it's going to that psychology of an investor. But the beautiful thing about it is the charts are amazing in that they tell you when the changes are going to come. And in fact, if you would, so let me show like my dollar chart here, my Dixie chart. Take a look at this, guys. So like the dollar had this big fall today, but look at where it was. Like the chart was telling you, like, look at this trend line, pivot high from early 2022 to this high and to this high. And so really it told you something was going to happen. And another chart that's just fascinating is the British pound versus the US dollar. And like, this is where we know that the Bank of England intervened by saying that they were going to start buying bonds again. But what's amazing is the chart almost told you something like this was going to happen. And this is what I always say, is that the charts tell you news is going to come out or something's going to affect the price of something. You just don't know what it is. Like, I didn't know the Bank of England was going to intervene. I just knew that, look at this. It was from 1985, the British pound was hitting a double bottom. And so the beauty of the chart is it's telling you something is likely going to happen, and then miraculously the Bank of England intervenes, and then you have this bounce that goes on, and the stock market here in the US really ripped up today as well. We saw some gains in crypto as well.
Gareth Soloway believes that technical analysis is extremely powerful, as it seems to predict a change in price, which is catalyzed by a fundamental news. As he showed us on his charts, the US dollar was almost guaranteed to trend lower after touching that trend line. Same goes with the British pound. No one knew why the GBP would start to appreciate in value, but the technical showed that current prices were a great point from where we could have predicted a successful bounce.
Yeah, so the Fear and Greed Index is okay. It does give you a general sense, but I haven't found it to be a great for like exact reversals. I would tell you another thing to look for is, like, I'll tune into the financial media, and the financial media, like, you'll have on, CNBC here in the US, and they'll be talking all bearishly and all this and that, and like, oh, this is so scary. And you can almost gauge from that when it's really powerful that they are in one direction, that it's about to reverse.
Twitter and the social media space in general can be a great macro indicator of the investors' sentiments. Remember how everyone was certain Bitcoin was going to 100K in 2021 and sharing it on all social media platforms? The exact opposite happened, and we saw a major crypto crash. Gareth says when the masses are all sure about something, that's when reversals occur.
I do think that we are headed into a global recession, but remember that recessions don't, the markets don't trade in a straight line. So you're going to get to these technical levels where people get overly bearish, and then you get these technical bounces, like, for instance, when the Bank of England does something like this. And then what you'll see is people start to sway and start to get bullish again. And then as soon as they start getting bullish in a bear market, you have to be on alert that it's likely not going to go too much further. So I don't think, for instance, a one-day bounce is all we're going to get here, but I certainly do think we are going to go lower across the board on all stock markets and really start to head lower. I'm kind of isolating down, and I can show my S&P chart here.
Sure.
SPX. There's a pivot point that I'm watching. So number one, notice where we bounced today. We bounced right at the lows from June. So a technical support level right there. I think this is a short-lived bounce. You might get a week, week and a half, 2 weeks out of it. But ultimately, we have to go retest the pre-COVID collapse highs right here. So that's down around 3370 on the S&P 500. And that makes a lot of sense, right? If you think about the Federal Reserve sucking all this liquidity out of the market, it makes sense that we have to go back to the pre-period before all this liquidity was put into the market.
Since the Fed is essentially snatching liquidity from the markets by increasing interest rates, Gareth thinks the markets will continue to drop lower. On the S&P 500 chart, it can be seen that a support bounce might occur at current levels, but that will be short-lived. Gareth is targeting June 2020 lows as his potential target.
Basis, I'm going to be looking to buy this level right here just because it is such a psychologically technical level right there. So there'll be a bounce off of that. But again, I'm in the camp where you're going to have 2 cycles to this bear market. The first cycle we're in right now, which is a cycle where the Fed is tightening, there's no more money printing, and so valuations have to come down. The second cycle is going to be after the Fed pivots, right? So the Fed is going to eventually pivot. We saw kind of the Bank of England already do that, right? So at that point, you're going to see a big bounce in the market because the Fed is pivoted. Everyone's going to say, oh, they're going back to easy money policy. I don't agree with that. I think the pivot is basically just not hiking rates anymore. And the next cycle is going to be when the economy slips into a recession, and that without Fed printing of money, if you think back to every past big market drop, whether it's a recession or it was COVID or whatever, the Fed has been printing us out. And so with inflation still staying above 4%, I have a long-term horizon of like multiple years where inflation is going to be 4% or so. The Fed cannot print us out of the next recession. And the market is eventually going to realize that. And that's going to be a big earth-shattering factor for the overall market, where they're like, wait a minute, how does the economy get out of this recession without the help of the Fed? And that's where you see that next leg down, where people say, okay, now we could be in a recession for years. I mean, it could be a multi-year recession, not just a 6 or 12-month recession period.
According to Gareth Soloway, this bear market would be in 2 cycles and might last a few years. He expects the markets to continue to trend lower until investors start to think the Fed is going to change their policy for good, and that's when we will see yet another drop in the markets. He believes that inflation will stick around at 4% for a long time, since the Fed won't be able to print their way out of a recession this time.
So right now, crypto getting a little bit of a bid as the dollar has fallen. Per the chart, we're in this bigger wedge pattern. So again, if I zoom out, this is pretty remarkable wedge pattern where you basically had the all-time high down sloping trend line. If we can break above that, it gives you a little bit of a short-term short squeeze on Bitcoin. Overall, I don't see it lasting for very long, and I ultimately see more downside. Right now, my high-end target on Bitcoin is around the 12 to 13,000 level, which would put us right down here at this pivot. Right now, we're still hovering around that 2017 all-time high before the last bear market. But I do think eventually it gets pushed below this level and collapses down to, again, 12 to 13,000. I know a lot of people have heard the headline of, like, Gareth says it could go as low as 3,500. That's kind of a worst case scenario for me, where if we really see, the financial markets collapse, we know that Bitcoin kind of follows the financial markets. It hasn't become a kind of a goldish type thing yet. Then you could be looking at a $3,500 target. Long term, I love Bitcoin. I think there's a huge place in the economy, in the global economy for it. But again, cycles are cycles, and we can't deny the fact that, number one, we're in a bear cycle. Number two, this is the first bear cycle that you haven't had Fed printing of money, which means it probably is going to be a worse bear cycle than past bear cycles. And we haven't even corrected 80% yet, which is what the past cycles did. So you have to kind of take that into kind of analysis.
The dollar has started to cool down a little, which is why we are seeing risk assets like Bitcoin holding their value and looking ready for a short squeeze, although that won't be sustainable given the overall market sentiments. Gareth has a final target of 12 to 13K Bitcoin, and in the worst case of a financial crisis, it could go as low as $3,500.
where I get my $3,500 target, if you compare the dot-com era to the last couple of years in crypto, where you saw Dogecoin and SHIB and I mean these crazy meme coins, and some of these coins going up thousands and thousands and thousands of percent. If that was the equivalent of what happened in the dot-com era, and Amazon in the dot-com era collapsed 95% before going up tens of thousands of percentage points, then you have to think maybe a 95% correction in Bitcoin could occur, in which case you're looking at 3,500.
Gareth gets his $3,500 Bitcoin target by comparing the crypto market to the dot-com crash. We saw companies like Amazon lose 95% of their value, yet they rallied tens of thousands of percent in the future because of the value they provided. Gareth sees Bitcoin the same way and believes that it will revolutionize the financial system of the world.
But I think you have to kind of keep in mind that this could be a bearish pattern. If we go to the parallel channel, right, we put a trend line below these lows here, and we drag this up, you basically are creating this. And so when I'm talking about maybe a breakout from here, you probably would head as high as this level here, which is around 25,000, but you're still in a sideways channel, which from this drop, or you could look at a bigger drop, it's still bearish as of now. It hasn't flipped to bullish yet on Bitcoin.
Gareth warns investors to remain careful because Bitcoin is forming a bearish pattern that will break down at some point. However, before it does that, we might see a small bounce that will get everyone bullish again, only for it to come crashing down again.
A little bit on Ethereum. I'm more of a swing trader on Ethereum at this point. But yeah, I mean, Ethereum, it's still well above these lows from June. It looks like it held this retrace. And this is just a great example of technicals where you had this, you can see pivot high, pulled back, broke out. And we know that when you break out, charts tend to want to come back to home base. Where was that breakout? Well, guess what? It was right there. It came right there and has kind of held up relatively well. Now, if we rally up, this down-sloping trend line becomes the resistance point. Now, with the merge, I mean, it's kind of been a little bit of a crazier analysis point on the merge, but right now, again, you're holding support on Ethereum, and it wouldn't shock me to see us go up and test this trend line up here.
Ethereum is sitting at strong support level from where we could get a bounce all the way up till the trend line which Gareth just showed on his chart. But this is only possible if Bitcoin remains stable or trends higher, because almost all other cryptocurrencies essentially follow what Bitcoin does. Thank you for watching this video. Please support us by liking this video and subscribing to our channel, because we upload informational content like this on a daily basis. See you guys in the next video.